Hi there, welcome to Nepi Invest. Time for my weekly technical update. And in these videos, I look at charts for various Australian or ASX companies. Sometimes I'll look at American companies as well. But in this video today, I'm going to do something a little bit different. I will look at three ASX companies, including Novonix, but I'm also going to look at oil, gold, and 30-year bonds because they're all looking really interesting right now. So apart from Novonix, what are the other two ASX companies I'll be looking at or featuring in today's video? And those two other ASX companies I'll be looking at or featuring in today's video include Perenti, which is a mining services company. And to be honest with you, after I've gone through quite a few financial year 22 results, a lot of mining companies or mining services companies have popped up onto my radar, and quite a few of these companies are looking quite interesting when we look at their charts. So Perenti is a mining services company. I've could have included Monadelphous, Decmil Group, Duratec as another mining services company in this video, but I decided just to keep it at one. And the other company, the last company I'll be looking at is Cronus Australia. I have not looked at this company in the past. However, this company is operating cash flow positive. They do still release Appendix 4Cs, and they are profitable. Not only are they operating cash flow positive and profitable, they also declared their very first dividend. So why is that significant? Well, Cronus Australia is a marijuana company. So it might be the only profitable marijuana company on the ASX. Now, the first company I'll look at is Novonix. This has been a market darling for a while, particularly a few years ago, but we have seen the share price pull back quite a bit. I think at one point in time, the share price of Novonix got to as high as $12, and right now the share price of Novonix is skirting right on $2. And why is that interesting? Well, $2 is a round number, and round numbers tend to be fairly strong, either resistance or support levels. And the last time I really looked at Novonix was when the share price was right on $4. That was back in May of this year. And then it fell through $4 and then tried to get above that support level, which became resistance, but failed. And it took about 3 weeks for Novonix to fail getting past $4. And then it quickly went from $4 all the way down to $2. Then it hit $2 and rebounded off. Now it's testing $2 again. And we saw share price on Novonix fall quite a bit on the 1st or the 2nd of September and finished just above $2. So $2 is a very important level for Novonix moving forward. If it falls through $2, that will be a bearish signal moving forward. But I would not be surprised to see another bounce, given $2 is a pretty strong resistance level for Novonix right now. And if it does fall through $2, I would expect $2 to be tested on the way up. So if $2 then is broken, once it's tested, that could be a good sign moving forward for Novonix. But fair bit of negative sentiment in this company right now, just based off the fact that the share price is in a well-defined downtrend and has pushed through $4, a pretty strong resistance level, and is looking like it might be pushing through $2. Now onto Cronus Australia. This is a chart that goes back to May, we'll say, May 2021. At that point in time, share price was around about 10 to 11 cents. Nothing much happening. Looks like there was some good news in September of last year because we did see some pretty good volume coming in. The share price really popped up from about 11 cents all the way to a high of about 18 cents. And that looks like that was a catalyst. Whatever news flow came through for Cronus back in September last year, that was a catalyst for re-rating the share price. And we actually did see share price reach a high after that of 39 cents, and that was in February. So over about a 5-month period, the share price more than tripled, almost quadrupled. And then the share price pulled back from that 39 cents all the way down to 17.5 cents before we have seen another significant re-rating in this company's share price on the back of a really good Appendix 4C for the June quarter and a profitable financial year and the declaration of the very first dividend. And that's why the share price has really taken off over the past few weeks. The company is still not overly valued. I think the market cap of Cronus Australia is still less than $100 million. And for a company that is growing quite significantly, you look at their revenue growth, it is increasing quite well. And the very fact that this company is now a dividend-paying marijuana company on the ASX. Now, if this was 4 or 5 years ago when marijuana companies were all the rage, more than likely the valuation of Cronus Australia would be like $500 million. dollars or maybe even more. But that hype in marijuana companies has really gone away. It's just dissipated. It's disappeared into the hype universe. And so, not really any more hype in this area. And that is advantageous for a company like Cronus Australia moving forward. And if they can keep on growing their revenue, keep on growing their dividends, this could be a success story in the marijuana sector. The last company I'll look at is Perenti, the mining services company. And this is the daily chart going back to late September of last year, so almost a 1 year chart here. And back in October 2021, share price of this company was above $1 for a brief period of time. And then the share price moved into a well-defined downtrend. In fact, the share price fell all the way down to 57.5 cents, which was reached towards the end of July, start of August. You can see twice in April and June, the share price went on a little bit of a burst, short-term burst, a very short-term burst. But as soon as the share price hit about 78 cents, we did see a little bit of selling coming in. So 78 cents was a pretty strong resistance level for Perenti. But you can just see what happened in August for this company. The share price has rebounded fantastically well. And one of the reasons why the share price has rebounded is because of a really good financial year results from this company. And the share price has moved above that pretty strong resistance level at 78 cents. So it closed on the 2nd of September at 80 cents. So if the share price of Perenti can remain above 80 cents, that would be very healthy, and that could confirm a breakout in the share price. Not only would it be going above a pretty strong resistance level, but the share price would be at least a 6-month high. And this is one of many mining services company I have my eye on right now. Not only do a lot of these companies look quite cheap or good value, but charts are starting to look interesting as well, and Perenti is one of those companies. Now on to gold, and this is the daily chart going back almost more than 2 years, back to June of 2020. The reason I wanted to go back that far is because gold has been trading in a range between about 2,070 and 1,680. And you can see the bottom of that range, 1,680, has a really strong support level for gold. So why is it a really strong support level for gold? Well, 4 times, actually 5 times now, in the past, gold has reached that level and we have seen a rebound. We saw it in March and April of 2021, August 2021, back in July 2022, and on the 1st of September. Gold, for a brief period of time, reached 1,680, and then we saw a bounce. Top of the range, we have seen gold reach that at 2,070 twice, back in July of 2020, then again in March of this year. So there is a possibility we might see gold rebound from here just because it's the bottom of the trading range and we have seen a rebound of that really strong support level. So I am a little bit more bullish now on gold for that just simple reason, that trading reason, nothing to do with the commodity itself, just because gold is right on or just above a pretty strong support level. I feel a little bit different in regards to oil. This is the 2-year oil chart going back again to June 2020. And from June 2020, even before that, oil was on a really good tag. And see oil increasing from about $35 a barrel all the way to a high of $130 a barrel back in February of March of this year. But it is struggling. And in fact, when you do look at the moving averages here, it does look like oil is moving into a downtrend. I'll just call this a short-term, medium-term downtrend. But oil is falling right now and currently is around about 87 to 90 US dollars a barrel. And finally, 30-year United States Treasury bonds or government bonds. I'll call them Treasury bonds from now on in just because I don't want to name the whole thing during the rest of this video. This is the daily chart going all the way back to the middle of 2020. And in fact, the August 2020 Treasury bonds was as low as 1.2%. They remained fairly low, between about 1.2% and 2.5% for the next year and 3 months. In fact, in December 2021, the bonds remained around about 1.7%. But from the start of January, over the next 6 months, the Treasury bonds rose from 1.7% to a high of 3.5% in the middle of June. And remember, June was a really bad month for equity markets. In fact, the first 6 months of financial year 22 were really bad for equity markets. So there is a correlation between the rising treasury bonds here and equity markets, sort of a negative correlation. And then we saw a little bit of a turnaround, a little bit of shift in sentiment from around about the end of June into July. Treasury bonds fell. In fact, they fell from about 3.5% to 2.9%. We also saw equity markets have a little bit of a bounce. Again, there is that correlation. So there was this thought in the market that this rising interest rate environment we're in was going to come to an end because of the fear of recession. But that sentiment has again shifted, and we are starting to see, or we have seen, the Treasury bonds rising again. In fact, they've risen from 2.9% to 3.4%. And that high we saw in the middle of June is under threat right now. So there is a possibility that the markets are a little bit less bullish about this rising interest rate market coming to an end. And the reason why the market is unsure about that is because the Federal Reserve in America, they have two mandates. The first mandate is full employment. The second mandate is price stability. So right now, we are at, or America is at, full employment. So the Federal Reserve is hell-bent on decreasing inflation because inflation is the worst enemy for price stability. So the Fed is all about price stability. So they are fighting tooth and nail to control inflation. So that means interest rates have the capabilities to rise further from here. And that's why the 30-year Treasury bonds have increased over the past month. That's all I have for this technical update looking at Novonix, Perenti, and Cronus Australia. Cronus Australia is a company I'm going to have to look at a little bit because it is the first marijuana company on the ASX to declare a dividend, and I think the first marijuana company in Australia to be profitable. So that is quite significant and a milestone for that sector. It also looked at oil, gold, and the 30-year United States Treasury bonds, and they're all looking really interesting right now. Now, I have no idea about the future, so I'm not going to try to forecast what's going to happen with the Treasury bonds, with the equity markets. I'm neither bearish nor bullish right now. I'm probably leaning more towards a bearish side simply because of the technicals right now. So the technicals are showing me that even though we did have this bear cap or this bear market rally, that bear market rally has come to an end. In fact, the NASDAQ has fallen 10% from the top of that bear market rally. If you have any thoughts about these three companies or gold, oil, or treasury bonds, I'd love to hear your opinion. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.